What up, investors? It's February 13, and thank you for joining me for my breakdown of Palantir Q4 2022 earnings. We're going to go over the conference call, the numbers, as much as I can afford to give you in the shortest span of time, okay? Here, I have a pretty cool graphic of the Palantir, right, which is the ISR run looking at you through the Palantir. Of course, Palantir is a Lord of the Rings reference. It's the all-seeing eye, essentially, and gives you all the data that you need to make decisions in Middle-earth. And this is kind of what you get from softwares like Palantir Gotham and Palantir Foundry. We're going to talk about all that, of course. Before we do, please hit that like button and hit subscribe. Hopefully, you'll learn something from these videos, and we have some fun. In the meantime, let's get to it. And here we go. Okay, let's go. So, for those that don't remember, and hopefully you do, Palantir is a software as a service developer, right? They develop platforms for artificial intelligence, data gathering, data interpretation, for you to make the best decision possible with that information. They have the government and defense side, which uses both Gotham and Foundry, and you have private business, which uses Palantir Foundry, with some secondary offerings, more specialized software like the Meta Constellation, Titan, and SkyKit. For military, if you want to know a little bit more about Titan and SkyKit, check out my Palantir at CES video. I'll drop a link below and here on the video screen. Hyperauto, Edge, Hospital, Foundry, Anti-Money Laundering, Auto Racing. That's your Ferrari, Scuderia Ferrari team for Formula One. Pretty exciting. And of course, Apollo is the base platform that sort of puts it all together and allows for the fast deployment of those softwares. Okay, now let's talk a little bit about Alex Carp. Okay, Alex Carp is a lot of things. Very smart, also sort of fidgety, moves around a lot, says inappropriate things from time to time. Not very polished until this conference call. This conference call was very impressed with Alex Carp and how polished he was. And it's a big sort of problem I've had with him in the past. In his many interviews, how fidgety he is, how he moves around, shuffles around, is on the table like this, or I'm not on the table, on the chair, and he goes like this, and he's doing some kind of weird gymnastics, but very polished during this call. And it definitely looks like he's learned a couple things and he's listened to the right people to make the right calls, okay? Now, I think that if anybody's going to give you a video about Palantir, they got to show you that they got skin in the game, okay? And I want to prove a couple things here. This is some positions, some long positions that I was buying back on October 1st, 2020, the day after DPO, the direct public offering, as opposed to an initial public offering, okay, in which I was buying Palantir shares back then. Of course, now I have substantially more shares through my Fidelity portfolio. That's my big dog main portfolio. 1,100 shares essentially there, and 475 shares in my TD Ameritrade. That's my 401k portfolio, for a total of 1,600 shares as far as my exposure to Palantir. Like I said, if somebody's going to talk about the stock, show us the skin in the game, guys. Show us what you got. Now let's move on to the numbers. That's the important part. That's what we want to see, right? So EPS, earnings per share, adjusted for stock-based compensation and other smaller factors, 4 cents versus 3 cents that the street expected. That's a nice beat. Revenues at 508 versus 504, 506, 505, excuse me. That's a beat as well. Positive 3.64 million. And the guidance was a miss. Okay, the guidance, these guys like to sandbag. If anybody's listened to Palantir, and I've listened to all the conference calls, all their earnings presentations, been over it again and again, these guys like to sandbag their numbers. What that means is they like to underpromise and overdeliver. Not a bad strategy. I think they're doing a lot of that here with this sort of mid-range at 505 when 520 is the consensus. They know very well what the consensus is. And then 2.18 for the year versus 2.29, or high end 2.23 versus 2.29. A little bit of sandbagging there as well. I think they can hit those numbers very easily, especially if we have that no landing or soft landing scenario in the U.S. and in Europe. Okay, Europe is a little bit different game than the U.S., but I think it's definitely within the realm of possibility. And of course, the big unexpected item of this earnings report, GAAP profitability, a little sprinkle of GAAP profitability of 1 cent per share. Okay. Now, I say sprinkle because it's 1 penny per share. Better than zero, better than a loss in a day of the week. I will take it. but part of me feels one way, part of me feels a different way about it. Let me explain. Now, GAAP profitability is the purest form of profitability that you can have. GAAP meaning generally accepted accounting practices, right? And it's the purest form. Here we have Alex Carp giving us the best quote of the day, in which he says, "A threshold has been crossed, and this is the start of our next chapter." So like I said, half of me is thinking, great, profitability, we'll take it. We weren't expecting it until 2025. Good for us, good for the company. Another part of me wants to say, well, these guys know what the complaints are about their businesses, specifically from retail investors who are constantly hammering them on Twitter and Instagram or whatever it may be. And on YouTube as well, here they hammer them about these things. So I think it's a very good strategy for retail investors to keep hammering whatever we don't like about the business, okay? And I'm talking stock-based compensation. They're addressing it here. We'll talk about that in a little bit. But as we keep hammering, they'll get better at it. I read all kinds of Seeking Alpha articles on Palantir in which they go, they can't scale. They can't be profitable, okay? Let's keep hammering those points as retail investors, and they will get better at them, okay? Now, let's go over the Q4 highlights for Palantir. This is coming straight from the earnings presentation. We see here achieved GAAP net income. We talked about that. Earnings per share GAAP, 1 penny. Sprinkle profitability. Revenue growth, 18% year over year to 509 in Q4, okay? 18% year over year revenue growth is pretty tame when we're talking about a massive exploding company like Palantir. Pretty tame, not bad, not great, sort of somewhere in the middle there, okay? Government USG revenue growth 22% year over year to 225. I think that's a better number, more acceptable. That's more in the good sort of category of growth, especially for government. Adjusted operating margin of 22% in Q4 and 261 deals closed, up 20% year over year from 2017. Mostly good, mostly positive there on the quarter highlights. Now let's talk about the full year highlights. And these numbers always look a lot better than the quarterly highlights, guys. The yearly numbers look usually really good for this company. And which they say U.S. business grew 32% year over year. And of course, remember the yearly guide is 30%, but that's for the overall business. Notice how they say U.S. business, right? They're not talking about Europe or the Middle East or anything like that. They're talking about U.S. growth, okay? U.S. commercial revenue grew 67%. Pretty impressive. How about Europe? Let's see, okay? Revenue grew 24% to 1.8 million. This is beyond the guide that Alex Carp gave us of 30%. So that's a little bit of a miss there. Not necessarily a highlight, but I think it's good enough. I really wasn't expecting that 30% number to be hit over and over again as you grow the business. Okay, customer count of 55% to 367 customers, up from 237 a year ago. Very impressive. Very, very impressive. Adjusted operating margin of 22%. 976 deal closed this year, up 61%, up from a year ago. Very, very impressive numbers as far as new customers and growth. Very, very good there. A couple more slides here on the U.S. business. Again, they do this a little bit to try to mask these things or the issues they're having in Europe. I mean, Europe is obviously going through recession. Some Asian countries, Middle East, going through recession. It's inflation is way more of a factor over there than it is here in the U.S. So, of course, we're going to see a little bit better performance here in the U.S. with revenue growth of 32%. U.S. commercial, 67%. Government, 22%. We saw that in the prior slides. And let me see, where am I here? And here we have government versus commercial. Government, 19% revenue growth. And remember, this is government, not U.S. government. This is government throughout the entire world, U.S., NATO allies, okay? So 19% revenue growth, and then commercial revenue growth, 29%. So you see, when you input these sort of international numbers now, the numbers look a lot more tame rather than the U.S. numbers that you saw on the previous slide. Now let's talk about net dollar retention. This is a pretty important slide. I feel that gets passed up in a lot of sort of breakdowns of Palantir. Here we're having ending full year 2022 with a net dollar retention of 115%. I think that's pretty strong in comparison to Q3 119, Q2 119, Q1 at 124, and Q4 2021 at 131. So you see a steady decline of net retention rate. Not entirely unexpected, and of course net retention rate is How many customers are you retaining? And are these customers, if it's above 100%, spending more money on the platform, adding more services? So this is, I think, after being in business for so long, this is a great net dollar retention rate. It is going down. We have to watch it to make sure that it doesn't dip below maybe 105, 108. I would start to get worried if it starts dipping under 105, but I don't think it will. I think that the amount of businesses that are being added quarter after quarter are going to start seeing that sort of scalability of the software and be able to buy more and more products within the software and expand their spend with Palantir. So I think that'll be okay. We'll watch net dollar retention rate very closely in the future. Here we see the total customer count grew 55% year over year in Q4. And here I added some of the customers that they added in Q4. So we got Ministry of Defense, that's England, Crisis 24, sort of like a crisis management sort of company. Centers for Disease Control, Lockheed Martin, Westtrack, that's sort of like a Australian Caterpillar type company. Integrity is a tooling company. Cloudflare, cybersecurity, very good cybersecurity company. Cleveland Clinic and Sampo Holdings, these are healthcare. Healthcare here, and here for healthcare. Healthcare doing very well and getting a lot of benefit from Palantir as far as if you see FoundryCon and everything they're talking about there. Here's something as far as deals go that I like very much. 55 deals closed of at least $1 million in Q4, 11 of which were at least 5, and 5 of which were at least 10. That's very diversified, I think, in my opinion, as far as the deals that are being closed. That's what Wall Street has a lot to say about the quality of business. When Palantir came out, one of the big criticism of Palantir was, hey, too many elephants, not enough gazelles. Too many big deals, not enough small deals. And I think that they've gotten really good at diversifying that and growing their customer count and not letting these deals sort of churn and drop off, and instead getting these customers to spend more on the platform. I think they're doing an excellent job of that, definitely, no doubt. Another thing I think they're doing a good job at is cost control. Okay, cost control, it's what's going to help you reach that GAAP profitability, and this is probably what they shuffled around a lot to reach that GAAP profitability. And we start with cost of revenue, and we can see on the 3 years ended, we see here less cost of revenue, and on the 3 months ended, less cost of revenue. Good amount there. Sales and marketing, less spend on sales and marketing. I don't think they need to do a lot of that anyways. Research and development. I like companies that keep a healthy amount of research and development. Here, we see a pretty nice drop-off, or I guess not nice, sort of like a not good drop-off of research and development. I think companies need to keep a healthy amount of their budget there. But again, cost controls in these environments, definitely appropriate in my opinion, but not appropriate forever. Okay, general administrative also down here on the spend. So good cost control by Palantir, but the most important part, stock-based comp, guys. That's what the big criticism of Palantir has been, is diluting shareholders through stock-based compensation. So this is when a company doesn't like to spend the cash they have on hand, $2.6 billion of cash on hand with no debt. Instead of giving some cash or some kind of monetary upfront incentive to a potential employee, a potential engineer, somebody who's going to work for the business, instead of giving them that upfront financial incentive, they give them stock. They go, here, let me throw some stock at you to see if you get happy, because it could go a lot higher in the future, and stock is so much more valuable than cash on hand right now. And they've been doing that to target all this talent that's coming out of Microsoft, coming out of Dell, coming out of what else? What's other companies? Yeah, Amazon, Facebook, all this talent that's coming out there. They're trying to retain it, but they've done a good job in reducing that stock-based compensation to give us that GAAP profitability. That shows me that they're taking this seriously. So whenever they're going down on their spend on the 3 month and on the year ended, I like that, and also how they're controlling their stock-based compensation, like that as well. Still looks pretty ugly here as far as the yearly number. Hopefully that gets better and better as time moves on. Now I want to bring a couple highlights from the conference call. If you guys have seen these conference calls before, they're not your normal Wall Street conference calls. These are YouTube videos. You log in through their investor relations site. They send you a YouTube link, and you see them on YouTube. If you ever want to see a conference call, just YouTube them on the Palantir. They usually put them up, and there's like a million guys that all they do is talk Palantir every day, all day, and I'm sure they'll have some link up there on YouTube to the conference call. Okay, now it says here, and Alex Carp is saying this. In most discussions, talk about product. I talk about product market fit. Occasionally talk about revenue, and I'm often asked, well, if it's so good, why aren't you GAAP profitable? Okay, and this is a big sort of criticism I've had of Alex Carp and Shyam Sankar, is that all they do is they talk about, look how good we are. Look at everything that's good we do in the world. Look at everything we did with the pandemic. Look at what we're doing in Ukraine. Look at A, B, C, D, right? Look at all this tech and how it's impacting lives. But at the end of the day, the financials are what matters. And the financials are you GAAP profitable? Okay, I'll show you guys in a little bit that, yeah, we've been talking about this for a long time and asking for this GAAP profitability for a long time, okay? And he's saying, we promised you GAAP profitability in 2025. True, they did, or he did, Alex did, which you thought would be in 2027, perhaps. Correct. Wall Street probably thought that very much, especially if you work for Seeking Alpha. You thought this was like 2030 or 2032. We are now in the last quarter GAAP profitable, and we plan to be GAAP profitable in this year. Very, very nice, okay? Obviously, there's a lot of questions around that, like how do we become GAAP profitable? Several years before anybody expected. What does it mean? What does it mean that seemingly no tech company ever becomes GAAP profitable? Why is our company profitable? What sectors made it profitable? Blah, 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 okay? And they go and talk about all that in the call. Please read it, to find out for yourself. But Shyam Sankar goes on to say, hey, some pretty cool sort of highlights. And again, talking about what the software does is important, but shouldn't be highlighted over the financials. Our software foiled a plot to overthrow the German government. Pretty impressive, okay? Delivered $200 million of return to Tyson Foods, empowered companies through energy crisis, blah, 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 blah. Okay, good. I like little highlights like this, little impressive highlights that sort of like, their eyebrow raisers, like, whoa, that's actually pretty cool. I like the way they structured this on the call, and they didn't make it all about highlights. I like that very much. Now here I'm bringing you another part of the call, okay, and what you're saying, the fourth quarter of 2022 was the strongest GAAP operating income quarter ever. Yeah, it's the only one. As we move closer to break even with an operating loss of $18 million, this is a testament to our disciplined spending amid the macro uncertainty, as well as the normalization of our stock-based compensation expense. This means they're listening, guys. This is what we want to see. Okay, and then here they go. As we look ahead to 2023, we'll continue to exercise spend discipline across the company. We just saw that as far as our cost of revenue, R&D, and those other SG&A sort of costs in that breakdown I did a couple of slides back. Here in the question and answer session, they go on to talk about more about SBC, stock-based compensation, and they're saying, hey, we're laser focused on SBC, stock-based compensation, and we have been in the last few years. If you go back to the quarter that we went public, Q3 of 2020, we had $849 million in that quarter of stock-based compensation. You go back to Q4 2022, that's this quarter. Just last quarter was only $129 million. So yeah, significant improvement. I get the need to use stock-based compensation to entice talent, but it is not the only way to entice talent when you have $2.6 billion in the bank with no debt. But I get it. It's a tool to use, dangerous tool, but indeed a tool to use. Okay. Now, stepping back, the ultimate test around SBC is really like, are you GAAP profitable? And the answer is now yes. It's yes in Q4. And as we look forward to 2023, the answer is yes there as well. So this sort of calms me down on the part of like, hey, you sprinkled a little bit of GAAP profitability to sort of get us to shut up about it. It gives me more confidence that they're taking this seriously and they're really there to control costs and show us more and more and more profit throughout the year. And here down on the conference call, a few pages down, Alex Carp again references maintaining the discipline around GAAP profitability. What I hope happens is that we go from showing 1 penny a share to like 3 to 8 to 15 to 20 to 30 in the next 2 to 3 years. That would do wonders for the share price, okay? And then now here at the end, he sort of talks about something strange, which I think, I'm not sure if CNBC messed this up, but they talked about potential acquisition target, or Palantir being a potential acquisition target for other companies. I'm thinking Microsoft, which is sort of acquisition crazy lately for anything AI. I wouldn't be surprised if Microsoft came up with some kind of offer to buy Palantir. But he's saying here, I think there's going to be a lot of interest in us buying our buying our software and potentially buying us. So that again, Microsoft, Google would be another one that comes to mind as far as a potential purchaser of Palantir. Remember, if we get a sort of acquisition offer, it'll be for cash, for shares, and we'll see result. It's probably going to be much higher than the stock price. I'm thinking somewhere between $17 to $25 a share. If you see that, we'll talk about it on this channel for sure. But hopefully it's just left alone, right? And maybe just some sort of loose interest there that never gets defined into a share price. That would be my expectation. And hopefully we don't get something like, oh, it's a $14 offer to acquire Palantir, and that's what we're trying to do, whatever. And I'll close it out with the last slide. I don't want to bother you guys too much for the rest of the night. It's already late, okay? But Alex Carp closed out the conference call with something I liked very much, okay? He says, I value individual investors quite a bit. And he said this several times in the past. We do at Palantir, all of us at Palantir individual investors, we listen to you. We're very proud that we're GAAP profitable in Q4 last year. We plan to be GAAP profitable this year. And that's in part because we listen to you. And I bring you Exhibit A, which is my tweets. If you see here, February 11th, okay, 2 days ago, I'm saying on Twitter, and of course, follow me on Twitter. Please follow me on Twitter. Palantir won't get anywhere until it shows positive net income. Before that, it's just a big window of opportunity to add shares. On December 21st, that's about 3 months ago, almost 2.5 months ago, I said, until Palantir gets serious about earnings and net income, don't expect any sort of meaningful turnaround. And then here on December 30th, I said, hey, what about net income? So yeah, we listen to you. So if you're a Palantir shareholder, go online, go on Twitter, look these guys up, right? Tell them what you think. Give them your input. They're out there listening to you guys. So again, if Seeking Alpha dishes out this big article about how Palantir can't scale, blow it up on Twitter. Blow it up and go, hey, Palantir, look, here's Seeking Alpha saying you can't scale. These challenges, all these challenges have been put forth into Palantir have all been overcome. So let's keep doing that as retail investors. Okay, if you guys have any questions about this video, let me know. I'll be happy to help you. Again, Palantir is one of my favorite stocks. It's probably one of the first to 5 stocks in my entire investing career that I really feel really deeply about, that we're going to make a lot of money in, okay? If you guys have any questions, again, let me help you. Hit like, subscribe. Thank you for listening. Peace out.